Hello. Welcome back to Bitcoin News Live. Very grateful to have you all here. We've got a big show ahead of us today. We've got a big guest. We're going to talk about Bitcoin as the neutral reserve currency for the world. So many things going on. We got markets at all-time highs. The Strait of Hormuz is still closed. And Bitcoin's just doing its thing. Well, let's get right into it. A 5-year-old Bitcoin prediction by a well-known macro analyst just started coming true in real time. And it may have just made $1 million Bitcoin inevitable. Back in 2021, Nik Bhatia made a bold prediction. He argued that one day, Bitcoin would stop behaving like a speculative tech trade and start acting like neutral global money. That sounded crazy at the time, but now the world is changing fast. After the recent geopolitical chaos surrounding Iran and the Strait of Hormuz, we're suddenly seeing Bitcoin used in ways that feel a lot closer to gold than magic internet money. And at the same exact time, bond markets are flashing warning signs. Sovereign debt problems are getting harder and harder to hide. And despite this, stocks continue ripping to all-time highs. Nik says one of these things is very wrong because Bitcoin still isn't a true risk-off asset. It thrives when liquidity is expanding and investors are willing to take risk, as they are obviously willing to do right now, which means this environment may be setting the stage for something most people are not positioned for. Today, Nik joins us live to explain why he believes the road to $1 million Bitcoin as the world's neutral reserve asset may already be under construction, and what you need to understand before it becomes obvious to everyone else. Hello, Nik. Welcome to the show. How are you doing?
I'm doing great. Thank you for having me, Rob. Appreciate it a lot.
Yeah, absolutely. It's wonderful to finally connect with you. Been a fan of your work for a long time. I think you bring a great, grounded, and yet optimistic voice to Bitcoin markets and everything that is going on in the world. So first, I want to dive right into the subject of today's show. Back in 2021, you released the book, Layered Money, and you said that Bitcoin is eventually going to be the neutral global money. So what evidence do you see of that happening, and how has that thesis changed at all over the last 5 years?
It has evolved. Bitcoin is evolving as a reserve asset. It's evolving in a way that's similar to what I predicted and what I wrote about, but with an interesting, more private sector spin. I had this thesis that Bitcoin would become neutral reserve money for the world from really starting with the individual and then progressing toward corporate and then progressing again toward the state level. Now, where we are today is much further along on the corporate and private sector level than I maybe would have thought, and less so on the state or sovereign level. And I think that's still okay for the layered money thesis, but it's a little different. It's evolving. For example, when El Salvador declared Bitcoin legal tender and started to make Bitcoin economic activity as central to their growth plan, as well as the volcano geothermal mining project and these concepts that at the time they were really unique and not common throughout the world. But many people thought that this would be replicated. I was hesitant to say that, yes, now everyone is going to come in, but to have nobody come in on any similar front on the sovereign level several years later is interesting. With that being said, the United States and the progress that the USA has made toward making Bitcoin a protected property, the usage of Bitcoin still protected for the most part. I know that there are a lot of cases going on in terms of mixing privacy that are of concern, and we will continue to watch that. But executive orders aside, there are plenty of actions from the SEC, such as Bitcoin spot ETFs going live in 2024, and suffering, and I should say specifically suffering, a huge defeat the SEC did in federal court in October of 2023 This was a momentous shift in Bitcoin's history because the United States isn't one guy in power, one party in power, one agency in power. It is a constitutional system with three branches of government that all interact with each other. And the judicial branch's action in October of 2023 put Bitcoin on a new footing. And so to answer your question about layered money and private sector versus the sovereign level, even though it was a federal judicial branch United States court case that made this change in October 23, it was the private sector that benefited, and a global private sector and a global sovereign basis using the US rule of law. And I specifically am speaking of Qatari and Emirati sovereign wealth funds that are large owners of IBIT, which is downstream from that one court case. So sovereign adoption at the sovereign wealth level from the Middle East. Specifically, we know that the Norwegian Sovereign Wealth Fund has had Bitcoin positions through Strategy and other names for many years. So Bitcoin being adopted at the sovereign level, sovereign wealth funds, but being adopted mainly through this IBIT and Strategy channel, which are separate channels, but similar in that they are private sector channels. I'm very optimistic on the long term of Bitcoin as layered money on the sovereign level, but it's taking time and will probably take a long time, much longer than maybe I had initially thought. But the private sector adoption of Bitcoin as the neutral reserve asset in the digital realm that offers diversification away from global equities, precious metals, and real estate, which is jurisdictional in its nature, is well underway. It, for me, does lock in $1 million whenever we get there sometime in the 2030s, because what you're seeing is the continued adoption. And so this is adoption mathematics more than anything else, such as valuation or market cap relationships, such as the Bitcoin to gold market cap, the Bitcoin to global stocks market cap, and other sorts of ratios. Really just the sheer number of people and entities that opens up the capital door, the proverbial door. And that door is open, it's wide open. And I expect it to continue to be left open because several of these United States-based legal proceedings and essentially institutional bureaucracy behind Bitcoin, which maybe some of the Bitcoiners hate that because it sounds status, but Bitcoin has reached the point where it's beyond just touching individuals to be able to make that impact. At a certain point, it has to be legal and embraced by the big governments for it to continue on that adoption path. It doesn't mean that people get left out. The most important thing about Bitcoin is that you can still self-custody it. And we have to do everything that we can to protect that in the USA. I don't necessarily have the highest expectations for every other nation, but as long as you can self-custody Bitcoin in the United States, its future is bright.
Yeah, it's so interesting to go down the sovereign adoption rabbit hole starting in 2021 with El Salvador. And we did think that that would kick off the dominoes, right? That all these small nations around the world would see Bitcoin going up. It's a flight away from the inflating dollar and a way to protect themselves and have this neutral reserve currency. And we did see some countries around the world pick it up. I mean, one notable one, of course, is Bhutan, who has been mining it, and they actually amassed a good amount of Bitcoin, I believe over 10,000 Bitcoin, but have since sold a good amount of it in order to fund infrastructure projects and help their nation in many ways. And the other people who have been adopting it, of course, I mean, well, China was a huge miner in the very beginning for a long time. We've had Russia, of course, be a large source of hash rate for years, and Iran. We don't have the exact numbers coming out of that country in terms of the hash rate, but it's estimated around maybe 2%, 2 to 4% of all hash rate comes from out of Iran. And now they are accepting it for passage through the Strait of Hormuz. What did you think about this story, and how does it change your thoughts on sovereign adoption for Bitcoin?
It's right in line, because Bitcoin is the neutral asset that can't be blocked, the transactions can't be blocked. That underpins the desire for transactions, full stop. So if you now introduce a situation like the Strait of Hormuz closure and tolling concept, of course Bitcoin is the currency, because there's only one Bitcoin in crypto, and in the fiat world, there's no country that's going to allow this type of transaction to clear banks, because it goes against the international order of the day. And then gold becomes seizable because the military, the Navy is there. And so if there's physical gold going in or out of Iran at the moment, there is at the very minimum intelligence, and if it's sea bound, then good night to that gold. And so Bitcoin is, of course, the only logical solution there. But is it a surprise? No, it can't. This cannot be a surprise. People should remember the WikiLeaks origins of Bitcoin's marketability. Bitcoin became marketable because WikiLeaks said, donate to us in Bitcoin, because MasterCard, Visa, and PayPal have blocked transactions, dollar-based transactions, so donate to us in Bitcoin. And it did keep the lights on for WikiLeaks, which we're still living in the echoes of these intelligence leaks, because now there are no secrets. Everyone knows everything. And now, if you want to layer in all of the Epstein information, all of that, the ability for the world to start to accept these intelligence-based inner workings of the world, geopolitics and all of that, and the backroom deals, WikiLeaks started all of that. So, and Assange on these cryptography mailing lists, and part of the cypherpunk original. I'm sorry that this is a tangent, but the history matters a lot. Bitcoin is a cypherpunk technology that found its original home in the community of people that were trying to leak state secrets and intelligence backdoor deals for how the world works. And they funded themselves to stay alive with Bitcoin as the first ever currency that you could use online that no government could stop, because it didn't have a direct line to the Bitcoin CEO, because that person doesn't exist. And so the Strait of Hormuz example must be thought of in the WikiLeaks context. And then it makes complete sense. And those two things are 15 years separated. If I have my history correct.
And so, I mean, if we look at the Strait of Hormuz, I mean, Besant is going all out war, financial war on Iran right now, right? They've frozen nearly $500 million worth of tether that was claimed by Iran. Prior to the war, there was cyber attacks on SEPA Bank, their largest bank, all their ATMs shut down. I mean, the people of Iran have suffered greatly because their financial institutions have been under attack for much longer than this physical conflict has been going on. What do you think in terms of the administration? They've obviously adopted Bitcoin. They put their hands around it. But do you think that this adds a wrench into their plans or their thinking around Bitcoin since Iran is so openly using it?
No, because everybody just uses the best tool that they can. And so I don't believe that it's a tally on the column of Bitcoin is for criminals, therefore Bitcoin is bad.
Mhm.
Bitcoin is being used as a tool by good people, by bad people, and with no judgment. So this isn't a, and to be honest with you, the people of Iran and the IRGC are completely, I think they should be thought of as separate entities. If the IRGC wants to use Bitcoin as ransom money or as toll money in the Strait of Hormuz, they are welcome to do so. If the people of Iran need to use Bitcoin to survive, they are welcome to do so. And Bitcoin is blind. And so Bitcoin was used by Ukrainians when that war started, and those headlines went mainstream and did put one tally for the Bitcoin is good side of things in the global eyes. So the IRGC taking Bitcoin through the strait should also be thought of in the context of Ukrainians using Bitcoin to flee Kiev, when that conflict started, and Russian drones were coming into Kiev. So I think that in terms of the United States administration, Scott Bessent, Congress, and all of these US entities that are looking to rule on Bitcoin, and I should say, and or stable coins, because they are starting to be grouped together in terms of Congress. So we mentioned the judicial branch, how they're looking at Bitcoin. Now, when we think about the legislative branch, they're looking to even more formalize their approval of Bitcoin as property and a digital technology that the United States should protect, and not protect on any necessarily pedestal by itself. That's not what we're talking about. But in the same way that people in the US are allowed to conduct business in whatever they want, as long as it's not against the law, that's what Bitcoin is also tracking towards. It's just another thing that our rights to use it are protected. It doesn't mean that it's made legal. It's just not made illegal. That's really what US, law is about. As long as it's not illegal, you can conduct business in it. And that's, part of our freedom of business. So Bitcoin is tracking toward that. I believe that the Congress, and because we already have the executive branch now, if the congressional branch, the legislative branch, can get its full Bitcoin stamp of approval going this year in 2026, it's 3 years removed from the judicial branch, and then it would be 1 year removed from the executive branch. But then the executive branch it matters the least, because as long as the courts say it and the law says it, the president has to abide by it, or else the president is in violation of the law. And the president is actually there to uphold the Constitution and the laws. So that's why the Clarity Act and associated language around Bitcoin is so important when we think about Bitcoin's long-term, because the strategic Bitcoin reserve and other executive orders that protect self-custody, the right to mine, all of which are being passed in individual states, which is fantastic. I mean, that is legislative branches on the state level. I mean, that's the foundation of the country. So all of that needs to continue. And it should pave the way for the legislative branch at the federal level to give Bitcoin its stamp. And once that happens, see, here's the layered money thesis. It doesn't, me saying Bitcoin going to 1 million and getting the adoption to get there, it doesn't depend on the Clarity Act. Actually, the Clarity Act is more or less guaranteed in one form or the other because of this path, and that Bitcoin is technology and is for the general good, not for the general bad. And so this is my optimism, and part of the layered money thesis is that Bitcoin is a commodity. It's a technology. It's based in sound cryptography and has a game theory and architecture that has proven to work, and the market has rewarded it. So the adoption has many, many years to go. So people can call this the power law, or just certain adoption curves. I've been taught by mathematicians that it's not an S curve, it's a power law, and that's how to describe it the best in terms of its adoption. And if people want to go down that Bitcoin science rabbit hole, the Physics of Bitcoin new book by Dr. Giovanni Santastasi would be my recommendation there.
Yeah, power law is a great rabbit hole to go down. But you're completely right. I mean, America getting mad at Iran using Bitcoin, it's as if they would get mad at them for using gold, right? That just seems completely absurd to even say out loud. So yes, I think this is the biggest story probably in Bitcoin this year, right? And I think it's just proves Bitcoiner game theory out. It shows that we've been on the right path in terms of our thinking for years now, and now we're actually seeing it happen in real life during a conflict at a very pivotal time, you could say, in history, as we are at the precipice of an AI revolution that requires lots of energy and possibly a world reordering. So now I'd like to dive into markets with you, because I love your insight into markets. You're very tempered in your approach, but you are eternally optimistic. And we are seeing charts that are just sort of eye-popping. I mean, if we bring up this here, this is the KOSPI, right? The South Korean stock market composite index. And it was trudging along for many a year. This goes back to 2022. And then we see it just take off last summer, a year ago. And it has gone essentially straight up. It's up 200%, right? It just since last June. And this is really riding the back of the memory need for the AI build out. We're seeing a lot of charts like this, right? It's not just the Korean stock market; it's also Micron. This is crazy. If we look on the monthly, you can see this is, this is pretty crazy, going from $98 to 898 in half a year, right? Or just over a year now. So, what is going on here? Is this sustainable? Is this the mother of all bubbles? And should people be euphoric or cautious?
Okay, so it's an excellent question, and I'm glad that you started with Korea, because it's probably one of the perfect ways to set this answer up. And if you'll allow me, because you just ask a great question. Everyone wants to know is this a bubble? That's what everyone wants to know. So let's talk about the bubble specifically in AI, because I'll talk about Korean stocks, I'll talk about Micron, and I'll talk about the S&P 500, and I'll answer, is it a bubble, on all of them, I promise. Starting with the AI bubble in general, is this an AI bubble? It will probably grow into a bubble. That we know from history, because capital tends to flood toward the latest innovation, especially one that's making waves and changing people's lives and changing the way we do business, like the internet. So will it be a bubble? Yes, it'll likely go to a bubble. Are we in a bubble now? The reason that we are so clearly not in a bubble now mainly is twofold. Number one, the IPOs haven't happened yet for the models themselves. And number two, the businesses that are making the stuff needed to compute, so I'm talking about chips, and this is the Korean answer also a little bit in it, and the Micron answer, there are shortages throughout. So it can't be a bubble if they're not making enough to service the demand for compute, which is the case. The demand for compute comes from two places. It's three, but it's really two. It's the models. So this is OpenAI and Anthropic. These are the two, and we'll throw in SpaceX there. So we have three companies that are pre-IPO that have top AI models. OpenAI, Anthropic, and SpaceX. These three companies have not IPO'd yet. They use compute, which is served by Microsoft, Amazon, and Google, for example. So these companies are paying Microsoft, Google, and Amazon to do the compute. The compute that they pay for from these companies goes to two places. Number one, it goes to you when you query the AI, and it gives you back an answer. So those are tokens that it's serving to you, the user. And the second place that the compute goes to is to training their own models to get better. So they have to balance, and the CEOs and CFOs have spoken about this. It's their biggest challenge: how much to use themselves and how much to use to serve the customer. So already there's a scarcity because they have to hold back tokens for themselves. And I said it's three because on the the lab side, they use it for training the model, and then they use it for their own work. So it's like two uses within that internal use. But the internal use, which goes to training and internal actual work that they're doing, that all those tokens cannot be given to the customer. So the customer is facing a shortage of tokens. The labs are facing a shortage of tokens because there's unlimited tokens they can use to train and to make their models better. So all of that is constrained. Why is it constrained? Because you have a constraint on the number of chips that are live and plugged in and doing the compute. So there's a constraint on the number of chips that are plugged in. There's also a constraint on the energy to power all the chips that do exist and are coming online. There's also a shortage in the data centers that are the physical infrastructure to put the chips in and to plug the electricity in. Then within the chips themselves, there are shortages on memory. And then in the smartphone world, which there's a huge structural demand for memory, and not just smartphones, but all computers in the world, any computing device that needs memory, now all of that memory is being swallowed up by NVIDIA because they're the largest bid and they will pay the most. So everyone else gets a price hike or their supply cut off. So at the low end of smartphones, smartphone production is going down because they don't have enough memory, because if they actually paid for the memory, it would take them to a negative margin, or it would destroy their margin. So they might as well not make the phone. There are shortages, Rob, everywhere that you look. It's not a bubble. Because the companies can't serve. So from a demand side, it's not a bubble. Valuations are their own tail. And so we can say that, yes, this stock might be very expensive versus this one isn't. And so to answer your Korea story, Samsung is addressing the shortage from TSMC. Taiwan Semi is the company that makes 90% of the world's chips. The other 10% is Samsung and Intel. So the bet on Samsung going from 6% to, let's say, 16% or 26%, whether it grows from 6 to 16 or 6 to 26, in a world of shortage, that's years of capacity for Samsung. And then SK Hynix, which is the Korean Micron equivalent for memory. And so, that now is the Micron story. These companies are being bid up because it takes 2 years to build a factory that can make a fab that can make RAM, DRAM, dynamic RAM. And so there are shortages everywhere. And when people buy these equities, specifically single name, they're betting that this is a supply crunch that can't be quickly addressed. And it will only be addressed by higher prices or more factories that are years away. So a short-term monopoly or a little duopoly for these couple companies that are dominating the memory realm. So while any individual company can get too expensive, and so maybe the Korean stock index in general is in a little bit of a bubble because it's mostly dominated by a couple companies. While that might be the case, and while Micron might be expensive today, Micron is going to several trillion in market cap. So whether that's in 1, 2, or 3 years, it's not expensive on a 3-year forward basis, which is why it's going up like it is. It's getting priced in. That chart you showed me on the Micron monthly candle, by the way, that's a breakout. That's not a bubble yet. Zoom out. That's not a bubble. That's not a bubble yet. It's the breakout. And I don't give investment advice, and we don't make portfolio or we don't give trading advice, but we do make portfolio calls and portfolio recommendations from our research perspective. And one of the ones that I'm writing right now is that these stocks are still cheap looking forward. Doesn't mean they won't take a pause or have a huge 30, 50% correction before they do the next thing. Actually, the volatility of it on the upside somewhat guarantees some downside volatility at some point to relieve the technicals before it can go back up. But the number of companies that will continue, SK Hynix joined the 1 trillion club today, I believe. The number of companies that will join it going forward that are downstream from this is plentiful. And the number of companies that will go from 1 to 2, Micron, I read today, had the shortest amount of time from 500 billion to 1 trillion market cap in history by a grand margin. I'm sorry, but on the S&P 500 and US economy, CapEx super cycle build out, none of these are in a bubble yet. They're just not. And I'm looking forward a couple years. I'm willing to stake a lot of reputation on that call. We are in a super cycle that is still early innings. I can't say it enough. We're not in a bubble. And when you get AI for the dumbest crap you can imagine, and that is going IPO, that's a bubble. That's going to be the sign that you're near the top or at the top or maybe past the top. Space, I'll repeat it one more time and I'll pass it back to you. And I appreciate you letting me go on this long rant. Yeah. SpaceX, OpenAI, and Anthropic are not public yet.
Yeah, I mean, you lay out the case, right? AI is definitely real. The shortages on pretty much every single level of the supply chain are also real, and that is what's causing these you're not bubbles, but breakouts, right? As you call it. And I agree with you, but I think we're starting to see the froth, right? Especially the stories coming out of Korea. You have pensioners who are leveraging their pension accounts. You have people going out in SK Hynix gear on the streets of South Korea because that's the coolest fashion trend. Like, I've seen enough bubbles, I think, over the last 15 years to sort of get a feeling because I think I'm my own indicators. Like, I'm very comfortable just investing in Bitcoin, but when I see these things pop off, you're like, oh, I should maybe buy some options. But that's when I know that maybe I think you're right. There will be drawdowns, 30, 40, 50% drawdowns in these things, but over the next 5-10 years, they will be substantially higher. I guess my one question left on the AI thing is, you think that these huge names IPOing is a huge boon, but isn't that also a classic sign of a top when you have the largest names finally IPOing after all these years? Like, why did Elon Musk wait all this time to IPO SpaceX for now, right? And why is the CFO fighting against Sam Altman? Sam Altman wants to IPO as soon as possible, and she's like, I don't know if we have the right financials for it. Like, why is that happening?
Yes, there's a lot of unproven revenue on the AI lab front. And I do agree with you that IPOs can be a sign that you've reached the end, and that's the owners cashing out. But there's an unlimited demand for tokens, and the growth rate of Claude enterprise contract revenue growth that we've been made aware of is unprecedented in business history. So listen, the way to avoid the bubble is to participate in this through the S&P 500. And I'm not giving financial advice here. I'm explaining the conservative approach to participate in this revolution. Because if you go chase this or that company, you end up wearing an SK Hynix hat to a restaurant. And that is bubblish. I will grant you that. But that's not how I would recommend, to play this. And I teach at USC Marshall School of Business in Los Angeles. And I have students of all ages now, which is really fun, from the undergrad to the graduate level to even pre-college is now one of the programs that I teach over there. And last year, and this is about 12 months ago now, I was explaining to these kids, high schoolers, that they should read financial news. You don't even have to pay for anything. 5 Bloomberg articles a month that are free, a couple Wall Street Journal articles that are free, and CNBC.com will be enough for you. And if you were paying attention to ChatGPT, and all of these kids had been using it for years. So I said, if you were just paying attention, and this is hindsight is 2020 because I didn't do this myself, but I was telling them, if you were just reading the news and you were like, oh, wow, ChatGPT has 100 million users in less than a month, the fastest adoption by any technology ever in human history. I wonder which companies are going to make money off of all of this. And they would have, within an hour of like basic Googling, stumbled upon NVIDIA as the play. And maybe if you're young, you go all in NVIDIA, like many people just went all in NVIDIA or Tesla or Bitcoin over the last 15 years. And they would have 10, 20, 30, 40. I don't even know if, from 2022, what they would have done on their money, 50 to 100x on their money. So I didn't do this. So it is obvious in hindsight, but you do have to just pay attention to what the demand is at the margin And we've had a Claude moment since, and this is from that industry because I've been consuming a lot of their content now to try to stay up on all this. Everybody in that industry, business or computer side, science side, is saying that between November and January, everything changed. It was the Claude Cowork moment, Opus 4.5, then Opus 4.6. There was a 2 to 3 month period where the world changed forever. We haven't opened that door fully. It's not, that door isn't even fully open yet. So I'm sorry, Rob, but I don't even remember your question. I'm feeling so passionate about this.
Yeah, no, just whether the IPOs signal the top or not.
Yeah,
you clearly say no. Like the world is different, but then you also hear that line a lot too at tops, that this time is different, right?
and I can't speak for OpenAI and Grok. I do know that Starlink and the SpaceX side of the revenue looking forward is very robust. I mean, extremely. And I do know that the Anthropic, my own projections for Anthropic's growth rate are probably too bullish for public airwaves. Again, if you want to conservatively participate in this, you buy the S&P 500, and your portfolio will not be less than it is today in 3 to 5 years time. It won't be. And I would say the same for Bitcoin as well. And there's no certainty in markets, but it's really these adoption paths over these more medium-term time horizons that help me or give me comfort in making some of these calls. And everything is public. You guys can read or watch my YouTube going back. You'll see the calls that I've made that are wrong, and you'll see the calls that I've made that are right. And, if we're being transparent, I was on and off from a recession watch in 2023 and for the early parts or for a lot of 2024 as well. As the AI revolution wasn't as clear to me back then. But then I took my recession call off in, I believe, December of 2024. That's 18 months ago, approximately. And so I've been bullish for a long time. I'm not a U.S. Treasury doomer. In fact, if you look at where U.S. Treasury rates are today at 4.5% to 5%, go back to one of the things that I was very wrong on in 21 and 22. I said, hey, if rates go to 3.5%, I said, if rates go above 3.5%, it's going to be a disaster for the U.S. economy and for the stock market. And I was one of those people that said, there's no problem going from 0 to 2%. It'll be fine. Like it can. But people are like, no, if it goes to 1%, everything's going to break, from when the Fed started raising from 0. No, it got to 3, 4. And I was like, now it's going to break. Now it's going to break. But it didn't. 2022 was a bad year for risk, Bitcoin and the stock market for sure. But into 2023 or 2024, I'm like, hey, these higher rates are the US economy shouldn't be able to sustain these higher rates at the fiscal level, at the private sector level. How can borrowing go on? And it did, and it broke through because we're in a growth and productivity boom, and higher interest rates are actually healthy for the economy because they raise the hurdle rate. They make capital go to more productive places than less productive places. And I'm not knocking on the Airbnb people, but there are pockets of the US economy that benefited from lower rates, that at a higher rate, the economics at the margin doesn't make sense. So the capital leaves and goes towards somewhere else where it can achieve the return. And right now, in a growth and AI supercycle, those are in materials, building, and technology at the frontier, and everywhere in between. I've told this story before. a friend in Arizona 3 years ago, he told me that in construction, he can't buy cement because Taiwan Semi is buying it all in the whole state. And that was the sign. There were signs. We had signs that you're not yet at the cap in where the demand is or where that future money is. And again, at higher rates, the US economy is doing very well on the aggregate. The US stock market and profitability is going very well at these high interest rates. So I like to be transparent. I like to call out all the times that I've been wrong. And I was bullish on Bitcoin for most of last year until the very end. Our liquidity index started to roll over. And then in January, I threw in the towel. There was a trend line around, 90 something, if I remember correctly. And when it broke, it was just, and it's over. Then you have to pull the bullish energy. You have to pull it and you say, it's not anymore. And then I made my bottom call at 64K. I called it the Jane Street bottom. It was more symbolic than Jane Street is manipulating Bitcoin down. It was more the timing of that story. And I'll be transparent about that. That 64 was my bottom call for this year. And I'm back to bullish again, but we also have our liquidity indicator, which swings from buy to sell. And so that also gives me a lot of signal. Bitcoin is still handcuffed by the treasury market and global macro and liquidity in many ways.
All right, we got to end this conversation on Bitcoin. I want to do a mini deep dive with you on where we're at, why you think the 4-year cycle no longer truly holds control over this asset. But before we get into that, we have to talk about our sponsors, our good friends over at Rhino. Previously, getting financial services in Bitcoin was slow, clunky, and scattered across all these different platforms. But Rhino is changing that. Rhino is the next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. With Rhino, you can buy Bitcoin with some of the lowest fees anywhere, make payments over the Lightning Network instantaneously across the world, send cash globally over Bitcoin rails, and set up the automatic savings, DCA, stack sats on your schedule, build wealth over time. Soon with Rhino, you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement, all seamlessly inside the app. And of course, security is a top priority. Biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never, ever rehypothecated. So go today to rhinobitcoin.com, download for both iOS and Android, use the code Bitcoin News, one word, Bitcoin News, and Rhino will give you $10 of free Bitcoin right into your account just for getting started. So check out Rhino, great people, hit them up on X, more than willing to answer all of your questions and get you started on your Bitcoin journey or help you build your financial services across the Bitcoin spectrum with this just one app. Great team over there. Definitely check them out. All right, Nick, we are back. We've got over 2,180 people watching live across both X and YouTube. If you're on YouTube, hit that subscribe button. Really helps out the channel. Thank you so much for watching this. And we've got to talk about Bitcoin now because liquidity seems to be out there. I mean, these markets are going straight up. Bitcoin has outperformed gold since the start of the Iranian crisis, but it has not kept up with the S&P 500. So let's just take a look at the Bitcoin chart right here. Of course, this is where we are at now. There was the big February crash. You checked out in January, sometime around here when we got back up to 97,000. We all thought we had some hope for 2026, but then we had a cruel February. We've been chilling in the 60s, 70s, climbed out as of early May back into the low 80s. We were feeling good, but then we banged our head against the 200, right? Like this right here, tough signal. If we had broken out of that, we might have had a bullish charge, but seeing it bang up against it, not being able to go through is not too promising. What is going on with Bitcoin? Why are we not following the markets to new all-time highs right now?
It's digestion. And what matters is Bitcoin's sensitivity to global macro and not necessarily the magnitude or the size of the move. So Bitcoin going from 120 to 60, and if it finds the bottom there, that's actually incredibly bullish because it did so in a wave of global risk off and a liquidity drawdown, higher interest rates, higher volatility, an oil crisis, and actually front ran the war by a little bit, but lined up with, you know, some of the treasury selling quite nicely. The sensitivity of Bitcoin to global liquidity keeps the fundamentals intact, which I think is a good story. The size of the move being, let's say, less impressive than the stock markets of late, it's not as material to me because it's still very correlated with the stock market. So the stock market has done well and Bitcoin has done less well. The stock market did poorly during the beginning of the war, but then recovered and kind of lined up a little bit with Bitcoin. Bitcoin did outperform the stock market at the start of the war, but that's because it did so poorly the month before and was in a bounce. This is a long-winded way to say that Bitcoin and stocks are still very highly correlated. This is something we track. And because they're very highly correlated, Bitcoin and stocks are still very much liquidity assets. And so why is Bitcoin, you know, why did it bump up against the 200-day? These are more technicals that Bitcoin has to digest this 50% drawdown, and it can't just go straight back up. Markets have to let themselves play out. And one of the things that we're watching pretty closely at the Bitcoin layer is the May and June expiry. So the May options expire in Deribit this week, and then the June ones at the end of June. We're waiting for these markets to clear to maybe get some of the protection bets that were put on at the beginning of this year as we went into the drawdown. Start to let some of that roll off and free the market for the next leg up. So it's not a surprise that it hit 200 and drew down a little bit. I do want to see the 73 area hold. That's one of the areas I'm looking at fairly closely. Without 73, you really do start to open the door back to the low 60s potentially and the bottom again. So I do want to see 73 hold. So we're coming up against that. And but I want to see Bitcoin continue to consolidate without making lower lows. And actually, we've started to make higher lows. So the last low was still in the, I think it was in the high 60s or maybe the low 70s. I'm just going to check if you don't mind me here. Yeah, it's actually in the mid 60s at 65. That's really where I'm marking the latest or the last low. And so if you get another low at 70, 72, that would be good. That would be really good. And you want to see Bitcoin continue to consolidate and work off some of that bearish energy. And that would be my short-term outlook to Bitcoin. But then Bitcoin as a liquidity sensitive asset, I think if interest rates can not put volatility at risk. So even if they go up, it's an edging up and not a dramatic spike where it's a put buying event in treasuries, because that really hits all markets. We saw that in March. You know, when put buying goes through the roof in treasuries, then everything starts to crumble. And so that's the holy grail of what we want to avoid. One more thing that we want to avoid is a spiking USD, because that ends up damaging global liquidity. But any one of these things by themselves can be potentially a risk. We want to see the market try to avoid most of these risks at the same time. And in that way, liquidity can stay buoyant. And then the kicker is going to be global banking assets over the next 2 years. I believe that they're going to rise in response to this AI supercycle, the growth and productivity booms that we're going through, and that should support risk assets, Bitcoin and stocks. We put out a free macro newsletter every weekend at thebitcoinlayer.substack.com. So if people want to follow along, we're tracking a lot of quantitative metrics for you guys.
Speaking of liquidity, did you see this chart yesterday put out by Andre Dragos, good friend of the show over at Bitwise in Europe? But he says that Bitcoin's historical relationship with global money supply is now sitting near the most extreme deviation seen in over a decade. The chart tracks Bitcoin and gold to global liquidity using a Z-score model with current readings falling below a -2 sigma band. So Bitcoin's never been more having a wider deviation from global money supply than right now. Does this surprise you?
So global money supply, which is a liability-based metric, people call it global liquidity, which is fine. It is a measure of something that people could call liquidity. That's not how we conduct our study at the Bitcoin layer. Our TBL liquidity index, it's a proprietary index. It's asset-based, and it has a collateral component to it, which means that as treasuries are the center of the financial system, the ability of banks to multiply those treasuries with fractional reserve lending and essentially leveraged banking practices, that ability to leverage is based in the strength of the treasury market and the amount of sovereign debt that they own, broadly speaking, as well as the amount of debt that they're extending to the private sector, which can be seen in global M2 or deposits on the liability side. So and Andre is a friend also, and I think he's an excellent analyst, we do not think about Bitcoin and global banking deposits, global M2, or any liability-based metric. That's not how we approach it. We do it from the asset side. And so when TBL liquidity indicator flagged a sell on January 14th, it actually did so at the end of December, and we confirmed it in the middle of January. We have a little bit of a lag for for certainty and for smoothing purposes. We want to make sure we're making the right call for people. That was the treasury market setting off an alarm bell that global liquidity is being sucked out. And you could have seen it in the yield curve as well. That was one of the places that you could have seen it if you were just trying to look at one metric. But global liquidity, TBL liquidity, turned over in December, January, because the treasury market started to really exhibit some weakness, and the dollar started to exhibit some strength, and Bitcoin responded accordingly. And then it turned back up in late March, early April, and we flagged that for people with a buy signal when Bitcoin was at 71,000, and stocks were much lower than they are today by four. I actually don't want to misquote it. These two risk markets are responsive to the treasury market more so than the liability-based metric of measuring deposits. Deposits are a way to measure the system, and I think that they're a good way to measure some things, but they're downstream from bank activity. They're the result of banking activity. They're the result of credit extension, and they're the result of money flowing into the certain parts of the private sector that are not utilizing other forms of shadow money, for example. So there's a lot of ways that M2 is a bad way to measure what we are trying to do, which is what is moving risk market. So that chart showing low correlation, it means that the way that we're doing it is a much better approach than anybody that's trying to forecast Bitcoin with global M2.
Makes sense. Well, Mr. Bhatia, I really appreciate your time. I want to respect it. So we're coming to a conclusion of this live show. You got some great comments here from our friend Kyle. Big fan of Nik. Great interview. This really was an awesome hour. I feel like class was in session. Learned a lot. And you're a big AI bull. All right. So just give us one tidbit. Is Bitcoin going to end the year above 100K or below 100K?
I'll go above.
Let's go. I love to hear it. That's what we like to hear. All right, nice. If people want to find out more about you and the Bitcoin layer and everything you guys create, where should they go?
Thebitcoinlayer.substack.com. We got a free weekly newsletter and a lot of great content that we're producing. You guys can find everything that we're doing there, or catch me on YouTube as well.
Absolutely. All right. Thank you so much, everybody who tuned in. If you're on YouTube, once again, subscribe, join the channel. We're making a lot of content. It's coming out real good, stuff like this. All right, everybody, until next Wednesday, we will see you live once again. Cheers and peace out.